Say it, say it. We're done. The house is ours. I paid every dollar, 30 years, never missed once. And they just... His name was Garrett Holcomb. He thought the finish line was freedom. It was a trap door. And yours might be next. Let me ask you something. What's the finish line of home ownership? You make that last payment, you own the house, you win, right? That's what they sold you. That's what your parents believed. Here's what actually happens. The moment you stop paying interest, you stop being profitable. And when a $5 trillion system stops profiting from you, it finds another way. Right now, there are 42 million active mortgages in America. The banks collect $213 billion in interest every single year. But here's the dirty little secret Wall Street doesn't want trending on Twitter. The interest, that's just the cover charge. The real money, that's in the fine print you never read. Garrett Holcomb, 47, electrician, Phoenix, Arizona. The kind of guy who keeps his receipts in labeled folders and sets calendar reminders for oil changes. 360 mortgage payments, never late, not once. February 14th, 2019, Valentine's Day. He logged into his bank account and wired the final payment, $1,847.32. He called his wife at work, told her to grab champagne on the way home. That night, best sleep he'd had in 3 decades. 31 days later, the letter arrived, not from his bank, not from the county, from a company called Orion Asset Recovery. Notice of lien enforcement and intent to foreclose. You have 45 days to remit payment in full or vacate the premises. I read it 3 times. I thought it was a scam. Here's the test, and be honest with yourself. Could you spot a $47 discrepancy in a 16-year-old property tax payment? Would you even know where to look? Garrett didn't, because here's how the con works. When you have a mortgage, your property taxes are escrowed. That's a fancy word for the bank collects a little extra every month, holds it, and pays your taxes for you. You never see it. You don't have to think about it. That's the whole point. Except, in August 2003, the bank's automated system had a processing error. It paid the county $1,200. The actual bill, $1,247. $47 short. $47, what you spend on takeout, what you tip at a nice dinner. The county sent a notice to the bank, not to Garrett. He wasn't on file as the taxpayer of record. The bank was. The bank never forwarded it, never corrected the payment, never said a word. 16 years went by, and that $47 error, it was growing, because here's the part that should be illegal. The county, strapped for cash, understaffed, desperate, didn't chase Garrett for $47. They did something smarter. They sold the debt to a private investor. A company called Orion Asset Recovery paid the county $53 for Garrett's lien. And under Arizona law, and laws exactly like it in 31 other states, Orion could now charge interest, penalties, collection fees, legal fees, administrative costs. By the time Garrett made his final mortgage payment, that $47 shortfall had metastasized into $18,300, and Orion had the legal right to foreclose on a house Garrett owned, a house worth $500,000. I called them, waited on hold for, 2 hours? When someone finally picked up, I said, "There's gotta be a mistake. I'll pay it right now." Garrett offered to pay the full amount immediately. Cashier's check. Your offer is declined. Foreclosure proceedings will continue as scheduled. They didn't want $18,000. They wanted the house. So Garrett did what you would do. He hired a lawyer. Cost him $4,000 up front. The lawyer spent 6 hours reviewing the case. Then he looked Garrett in the eye and said, "It's legal. Technically, they have the right." But here's where it gets dark. Garrett's lawyer kept digging. He traced Orion's ownership. Orion Asset Recovery, LLC, is owned by a hedge fund in Connecticut. That hedge fund is owned by a private equity firm in Manhattan. And that private equity firm is financed by the same bank that held Garrett's mortgage. Let me say that again. The bank made money on Garrett's loan. The bank made money on 30 years of interest. The bank underpaid his taxes. And now the bank's subsidiary is foreclosing on his house for $18,000 so they can flip it for $500,000. You were never the customer. You were the product. But Garrett got lucky. Local news picked up the story, then state news, then NPR, then it hit Reddit. The outrage went nuclear. The state attorney general opened an investigation, and Orion Asset Recovery, they dissolved overnight, vanished into another shell company with another name in another state. Because that's how these companies work. They're not built to last. They're built to extract. Garrett won. Technically, the foreclosure was dismissed, He kept his house, but here's what victory cost him. $41,000 in legal fees, 19 months of his life, his marriage. His wife left in November 2020. She couldn't handle the stress anymore. And even though he won, even though the foreclosure was dismissed, it still tanked his credit score 200 points. He can't refinance, can't get a car loan, can't get approved for a decent credit card. He won, and he still lost everything. You think Garrett's story is rare, an outlier, a glitch? Since 2015, more than 1.6 million American homes have faced tax lien foreclosures, most for debts under $500. $500, that's a car payment, a weekend getaway, dinner for four, a cheesecake factory. And for that, they lose everything. Because here's the secret buried in your mortgage contract. You agreed, whether you knew it or not, that the bank is responsible for paying your property taxes. That's what escrow means. They take your money, they hold it, they pay the county. But look at this. In the event of processing error or underpayment, borrower remains ultimately liable for all tax obligations. They control the money, they make the payment, they keep the records, but when they screw up, you pay the price. So here's what you do. Tonight, before you go to bed, Step 1, Google your county treasurer's office. Step 2, request a tax certificate or payment verification for your property. Most counties let you do this online. It's free. Step 3, compare it to your mortgage statement. Make sure the amount your bank says they paid matches what the county says they received. Do this every year. Set a calendar reminder, the same day you check your smoke detectors, because they won't call you when there's a $47 shortfall. They'll sell it to an investor who sees your 3-bedroom, 2-bath as a 16% return. Do you know right now, right this second, if your property taxes were paid in full last year? If you hesitated, you're not alone. 78% of homeowners have never checked, and that's how $47 becomes foreclosure. Here's what I need you to do. 1. Check your property taxes this week. Comment below when you're done. I want to know you're safe. 2. Share this video with someone who owns a home. I don't care if it's your parents, your friend, your ex. They need to know. 3. Subscribe, because next week, I'm showing you what happens when the bank doesn't just take your house, they take your identity, and you don't find out until you're already destroyed. Garrett Holcomb still lives in that house, alone. He keeps that screenshot on his desktop, the one that says, "Paid in full." I asked him why. It reminds me that the game was rigged the whole time, and I never even knew I was playing. You can pay off your mortgage. You can do everything right, follow every rule, never miss a payment, be the perfect American. So here's the question you need to ask yourself tonight. Who really owns your home? You or them? Next time, I'll show you what they take everything else. I'll see you in the next one.